Well. Happy Monday, everybody. This is the Flow Show. I'm your boy, Sean McLaughlin. That's my boy, Steve Straza. Straza, what's happening, buddy?
Feeling good, except for a little sunburn. Um,
Yeah, you look like you spent the weekend on the beach, which one should do when they live in Florida.
a little bit. I don't do it enough. So glad I did. Next time I'll remember the lotion. But hey, the more you know.
Well, we had a very Florida-like weekend here in Colorado. We had basically a hurricane this weekend,
Did you?
100-mile-an-hour winds, crazy.
We got hurricanes, earthquakes. What is going on out here?
They shut I live near the city of Boulder, and the city of Boulder, they shut down power to the entire city preemptively for about 18 hours because they were so worried about this wind. And the wind was bad. I mean, it was yeah, a lot of down trees, a lot of down stop signs, traffic lights were out, crazy.
Did you get power right back after?
Well, where I live, thankfully, I had power throughout. They didn't turn the power off here, but in the city of Boulder, which is nearby, they shut the whole city. They shut down, which is crazy. Anyway, that's not what you're here for. This is the Flow Show. So what we do in the Flow Show, if you've never watched this before, this is where me and Straza walk through our process and come up with some trade ideas. This is what Straza and I do on a daily basis, just internally, coming up with trade ideas. And we figure, why don't we share this process with you guys at least once a week, just showing you how we do it so that maybe you can learn a little bit from following our process. So Straza, the way this works is Straza comes to me with some ideas, some setups that he likes, and then I'll look into the options and see if there's an options trade to make. So Straza, what do you got? What's on your mind today?
This morning you came to me with an idea.
Oh,
Sean,
I did.
I was at the beach all weekend, so Sean must have been going through charts for me. Um, Let me just set the stage a little bit, then we'll get into it. The past few weeks, Sean, we've talked about things like the breakout in energy, right? So this is XLE, large cap energy spider, giant range here, upside resolution. We've talked a lot about materials, giant range here, a lot of sideways, upside resolution. So we've been putting on trades in both of these spaces. It's been probably at least a month, maybe even a month and a half since we talked about the other big cyclical group, which is financials. Similar chart setup here. So this is the Spider Financials ETF, XLF. We could draw it in a similar way as XLB, XLE. Point being, this is yet another pond that we should be fishing in. Sean sent me a chart of Wells Fargo today, which is one of the largest components of XLF. And just look at how nice and tight this is. If we mark this up, you got a little base here. Let's just draw out the rounding bottom. Okay, something like that. Big leg higher out of the base after a slow start. Slow and sloppy start, false start, shake out lower, false start, shake again, go. And then this is what has my friend interested today, isn't it? High and
So
tight.
uh, I should preface this, Straza, by saying that I currently am already in a Wells Fargo trade, but it's a longer term one. It's got January options. And looking at this high and tight flag that's forming, I'm thinking that maybe there's an opportunity for a little add-on trade here, a little bit tactical, a little shorter term, just for a little extra juice when we get this popped. It could be quick when it finally does pop out of here.
Love it. And do you know what it reminds me of? Before we talk about the strategy around it, remember this one?
Goldman Sachs, yeah.
Goldman. And it got real tight here, real tight, real tight. And if you were long calls for this little explosion, they were short dated, you could have done really well. So I think when you say something more tactical, how tactical are we talking?
Well, that's a very good question. Let me pull up something on a different chart over here. This is not for my screen share, so Gene, don't pull this up. It's unnecessary. But I'm just looking up the next earnings date. The next earnings date for Wells Fargo is April 12th, so actually sooner than I expected. Wow, that's in 4 days. Does that make sense to you?
Yeah, they kick off earnings season and we're here.
Oh, okay. Well, geez, I did not realize that. That changes my tone a little bit. Actually, that makes me want to go even shorter term, Straza. I think because where I was going in my head, I was thinking earnings were at least 6 weeks to 2 months out, and I was thinking that we would kind of position for maybe a lead up into earnings with a potential earnings resolution that would just kind of complete the trade for us.
Yeah.
But with earnings coming up next week,
No, they're Friday, aren't they? I'm
is
seeing
that
Friday.
Friday? It is Friday. Since when do banks announce on Fridays?
They do, and I think one or two others. They're literally the first reporters.
All right. Well, okay, that changes my math a little bit. I would because that's going to put some juice here in these short-term options. It's going to make it tricky to just buy calls.
Yeah.
But that said, Straza,
50s.
the calls that expired this Friday. If we really want to play specifically for an earnings bounce or an earnings reaction, these 60 calls that expire this Friday are trading for about 50 cents. I don't know if I want to go that short term. I might want to let like have the reaction and then some follow on, some follow through,
Yeah.
right?
I think you want a couple weeks.
Yeah. So maybe just go to May, right? Like just give us a full month.
I like that.
The 65 calls I don't know if that might be a little too far away. 65 for May. They currently have a 10 delta. That's too far away. So
Yeah.
we could look at you know what? I generally don't like buying close to the money options, but the 60 strike, like they don't have every dollar strikes in May. They have every $2.50, which is weird. So like our options are we could trade the 57.5, which is basically at the money right now, or we could trade the 60 or the 62.5. So I'm looking at the 60s again, but in May, a
Yeah,
buck 15 we can get them for right now.
because if this flag goes, Sean, you want me let me just measure it out quick. And let's
Yes,
see where it
please
gets
do.
it. So the way you would do this is just measure the flagpole, as they call it, which is the leg or the rally into the high and tight pattern. We do it here on percentage terms. We're looking at about 20%. On points basis, about $10. So $10 measured out from 58, about 68. And a month should be enough. And if you want to do it on a percentage basis, which I don't like as much, then it gets you all the way up to, just north of 70. So
All
68,
right.
70-ish range is where we're looking. These kind of moves on a very short-term continuation pattern should happen quickly. So I think end of May or mid-May, that gives us like 5 weeks. That should be enough.
Yeah, I'm glad you did that exercise. That puts it in better perspective for me. So let's split the difference and say 70 might be a reasonable target on a post earnings reaction. If that's the case, Straza, then us buying the May 60 calls right now for about a buck 15, buck 20. If Wells Fargo goes to 70, these calls are going to be worth
10x.
10 bucks.
Whoop, whoop.
That's 5x, more than 5x on our investment. So, all right, I like it. I've been looking for an opportunity to add to this trade because I like this setup. We had a nice decisive breakout back in late February late February. Decisive breakout, and then it's been consolidating nicely, and it's got a rising 50-day moving average below it, and it's consolidated for what, a good 3 weeks now.
Yeah.
With earnings coming up, that could be the catalyst. Yeah, I like this. I like this for a tactical trade here.
And you're getting these nice little consolidations along the way. But if you zoom out just a little bit on this, I'm looking at the October low here, which is when most things bottomed in Q4 of last year. It's $38. If we're at 70 potentially after this flag resolution, this thing's almost a double just off of the lows from last fall. There's a lot of momentum, even in a big bank, low volatility name like this. Kind of like it.
Random question here, because I know we've been talking about this a lot on the morning show. JC's been talking about the bond market a whole lot lately. Banks like Wells Fargo, the big banks, do they benefit from higher interest rates? Is that a higher interest rates play, or is that not really the thing?
They're not going to like blow up and have balance sheet problems like some of the regionals are having from higher or rising rates. Some would even argue that the big guys are the beneficiaries from when rates rise and hurt the regionals. It just makes the big banks more powerful. But really, it's hard to say. It's more about the spread.
Okay. Because I was going to say, to me, this just feels like another data point supporting that The bond market's telling us that rates are going higher, even though the narrative out there for John Q. Public is that interest rates are declining, but that's not really true. That's not what the markets are telling us.
And you're right,
Yeah.
Sean. Historically speaking, higher interest rates, good for banks. Banks are one of those groups that traditionally benefit from a rising rate environment.
All right. Well, certainly not the reason why we like this trade. I mean, that's just an extra piece that might help us, not the catalyst that we're looking for, not the reason we're going to trade. The real catalyst, well, there's two catalysts that we like here. We love the chart setup. If nothing else, the chart setup is wonderful. A decisive break above 59, we're off to the races, most likely. Secondly, we got earnings coming up at the end of the week. Earnings surprises. If there's a surprise in the offing here, they tend to happen in the direction of the underlying trend. And this underlying trend in Wells Fargo is undebatably higher. So I like our chances here. It's a defined risk bet. We buy the May 60 calls. We pay $1.20, let's say. That's the absolute most we could lose in a worst case scenario. We probably won't lose that much if we're able to get out right after earnings. If the earnings happen and Wells Fargo reacts negatively and goes down, yes, we're going to suffer a loss on that trade for sure. But will it be a 100% loss? Probably not, unless something really crazy happens. But I will say, from a risk management point of view, Straz, if we do get a negative earnings reaction, I will exit those calls on Friday for whatever I can get. Right?
Yeah. So they had a negative reaction last quarter, down a little over 3%. You know, it's a big bank. You're not going to see a down 10% day unless something strange comes out.
So, I mean, let's just, argument's sake, I don't know if you have it on your chart. On my chart, I got a 50-day moving average. The 50-day moving average is right up about 54. So let's say, and that jives with what you said about like a 3% move. If there's a negative reaction to Wells Fargo, unless it's something catastrophic, which I don't see that happening, if it's just a typical garden variety negative reaction to an earnings report, good chance that it's probably going to come down and touch that 54 level, which is where the 50-day moving average is. And if that happens, Straza, those May 60 calls that we could buy for $1.20 today, maybe I have to get out of them for 25 cents, maybe 35 cents if I'm lucky. Yeah. You know, it's a loss, but it's not a total loss. And that's what I like about this.
And you talked about the upside, right? So when you think about what your potential risk could be, you always have to measure it against the reward. And we're looking at 5x of gains. If we're right, the risk reward equation still works out.
Yeah. So so I think that's the play, Straza. Thanks for mind melding with me and seeing what I was seeing. I sent you that flag during the morning show. I'm like, Straza, we got to talk about this thing.
I was like, oh baby. And running into earnings, we're high and tight here right now. The flag is formed in early March, so we're a month in here, kind of middle of the way. You don't want to see a flag last more than 2 months. Sometimes you see a little reaction, like maybe it starts to go before earnings, but I think the better or higher likelihood here is that we keep probably consolidating, coiling here, and then the earnings reaction would be the catalyst for that eventual upside resolution.
Yeah, that feels like the play. All right, Straza, I think we did good work here today. We got to it quickly. I like it. We just, we got right to it. That's good.
Yeah, no, this
is busy. The market's open. People are trading, Let's give them what they want. We gave them a great trade idea, a tactical trade idea. I know, we often come up with ideas that might take 3 to 6 months to play out. We just did an energy trade last week that's going to take 3 years to play out. Right. But I know we got some junkies out there that love to trade these short-term things. These zero DTE people, earnings junkies. So this trade's for you. We like it. I like our odds. Let's see what the market has in store for us. What do you say, Straza?
Short and sweet. Go UConn.
All right. Well, that's it for today, everybody. Thanks for tuning into the Flow Show. We try to do this every Monday. We don't get every Monday, but we try to do every Monday. And we'll be back next Monday for sure, as long as Straza survives this weekend in Miami with JC later this week. We'll see.
Yeah, you're right about that.
All right, everybody. Thanks for tuning in. We'll catch you next week. Take care.
Happy Monday.
Go UConn.
Bye.